Good day, everyone. This is your European Open briefing for Wednesday, 31st of August. My name is Michael Frentiades. I'm the chief economist here at Exxon.com. These are the key points you should be aware of today. The US dollar is strong across the board, especially versus the Japanese yen. On Fed rate hike reassessment, let's say, consumer confidence beat also helped the dollar. Consumer confidence in the US was announced yesterday and was pretty strong. The pound benefited from stronger than expected house prices. Also, we have some month-end flows affecting the currency market. We have, looking forward to today, Eurozone flash inflation, ADP employment report in the US before the non-farm payrolls, and pending home sales. Oil inventories will also be watched as oil has been rather volatile lately. On to dollar yen. It made a fresh 1-month high as it traded above the 103 level. There is a rethink of potential for Fed moves following Yellen's Friday speech and other Fed officials. I would nevertheless note that the 2-year yield has retraced some gains in the last 2-3 days from 85 basis points down to 80 basis points more or less. Yesterday there was a strong beat on consumer confidence, the conference board consumer confidence. It came in at 101.1 versus 97 expected. So this was also helping the US dollar. There is also a suggestion that the yen has been affected by excessive speculative positioning, a lot of yen longs, so the unwinding of those trades might have given the dollar yen an extra boost. As we said, month-end flows could also be an issue for both yen and the pound. Today is also the last end of the summer with September marking the beginning of autumn. Now, Japanese industrial production missed estimates. It came in 0% month on month versus 0.8% expected, so that was a bit disappointing. That was a warning from a Japanese official also on the yen, so that may also have weighed on the currency. Now, what I find interesting is that other markets, such as stocks and US treasuries, particularly on the long end, are not as moved by this talk about Fed rate hikes as the foreign exchange and particularly gold, which made low yesterday below $13.10 an ounce. So this is an interesting divergence that the stocks are taking this development in their stride, but there is a little, and treasuries as well are also not moving much, but FX and particularly gold is, we are seeing, let's say, more movement. On to the pound. I have chosen the euro pound to show that the pound is pushing the euro towards a 3-week low, just below 85 pence. That was a low around the around 9th, 10th of August, around that time of 84.85. UK data have generally been coming in favorable, and the latest reading on UK house prices by Nationwide for August also surprised on the upside, plus 0.6% month on month versus minus 0.3% expected. So instead of falling, house prices actually rose for August, the second month after Brexit. So we also had GfK consumer confidence. It was also a little better at -7 versus -8 expected. So the pound is doing well versus most majors, but it's only holding its ground against the US dollar because, as we have already talked about, the greenback has been helped by Fed talk lately, the talk that they might raise interest rates more. Like we said, nationwide house prices were up 5.6% year on year. Supply issues are still supporting house prices post-Brexit, and you see that you're looking at the chart, there's no obvious Brexit impact following Brexit. So the debate about the economic impact of Brexit is continuing. Overall, the view is that it's too early to judge the impact and that this may come in the form of less foreign direct investment in the future, less foreign direct investment into the UK, which might be a problem given the country's current account deficit. So it's a very interesting mix for the UK because we have the Bank of England initiating some aggressive monetary easing action. We have economic data coming in relatively good, and we also have Brexit talks setting up for the beginning of the new year. So a very interesting mix for pound. We should see a fair bit of volatility, but also a two-way trade there. On to the calendar. Today's I would say key number is probably Eurozone flash inflation. Is set to pick up modestly from 0.2% to 0.3%, and the core is also set to rise from 0.8 to 0.9. Unemployment is also coming out, set to fall a little bit at 10%, just double-digit unemployment only just for the Eurozone. And then we have the ADP employment numbers. They are expected at 175,000, and they will set up the stage for Friday's non-farm payrolls, which are expected at 180,000. And this is a very key number for the Federal Reserve, as the labor market seems to be their key focus. So all eyes will be on Friday's number, and also we'll have Chicago PMI and pending home sales. So that's all for today. Thank you very much for watching and have a great day.